This is a podcast from the Business Times.
Good evening. It's Wednesday, July 15th, 2026. Here's your market-focused daily closing bell update by the Business Times. Asian shares closed higher across most markets today, amid a softer-than-expected U.S. inflation reduced expectations for additional interest rate hikes, while oil prices rose slightly due to the increasing hostilities between the U.S. and Iran. President Donald Trump reinstated a naval blockade on all Iranian ports, while the U.S. and Iran continued to exchange fresh strikes against each other. Iran's Islamic Revolutionary Guard Corps, the IRGC, warned the Strait of Hormuz would remain closed until what it described as the end of America's evils, and also threatened to disrupt oil and gas export routes serving the U.S. and its allies. Brent crude advanced 1.2% to $85.72 a barrel, while the U.S. West Texas Intermediate crude moved 0.8% higher to $79.98 a barrel. Back in Asia, the MSCI broadest index of Asia-Pacific shares outside Japan climbed 2.4%, led by gains in South Korea. The South Korean Kospi index closed 6.24% higher today, helped by SK Hynix, which saw its shares surge nearly 13% today, buoyed by gains in U.S. technology stocks, as well as optimistic analyst forecasts for sustained AI memory demand. The upbeat sentiment lifted other South Korean chipmakers, with Samsung Electronics advancing almost 8% and semiconductor equipment manufacturer Hanmi Semiconductor surging around 25% in early trade. In other Asia macro news, China's economic growth lost momentum in the second quarter, between April to June, slowing to its weakest pace since 2022 as an accelerating downturn in investment added to pressure on the economy while consumption remained lackluster. Its gross domestic profit, GDP, expanded 4.3% from the previous year, missing analysts' expectations of 4.5% GDP growth and lower than easing from 5.0% growth in the previous quarter. Mainland China stocks fell after a choppy trade today, with the CSI 300 index closing 0.2% lower at 4,786. Elsewhere in the world, ASML, Europe's most valuable company and the world's leading maker of chip-making equipment, saw its shares surge 7% in opening trade after it announced a beaten revenue forecast. Despite the upbeat earnings, European markets have pointed to a downward start, with the Pan-European Stocks 600 index down 0.15% and London's FTSE 100 down 0.5% in early trade. In other earnings news, U.S. Big Blue stock, IBM saw its shares tumble 25% overnight after the technology giant issued a weaker-than-expected revenue forecast. The company's CEO issued a warning of enterprise customers shifting their capital expenditure towards AI-related hardware such as servers, storage systems, and memory chips, and away from software. Strong earnings from major Wall Street banks nevertheless lifted broader U.S. markets, with the S&P 500 and NASDAQ closing higher yesterday, and futures today ticking up for the benchmark indexes across the board. That's it for today. For more business news and market updates, visit bt.sg. And lens on daily for the latest tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.